I asked the question, who's buying stocks, cryptos, and houses when nearly 70% of this country is living paycheck to paycheck? It's Wednesday, May 11th, 2022. So much to talk about today. Before we begin, make sure to give this video a thumbs up. Please make sure to subscribe to this channel. Hit that bell notification down below so that you are alerted with the newest videos. And make sure that you share these videos all over social media with all your friends. And I apologize if there's a leaf blower in the background or a little bit of wind. But it is nice to be back home. But I got to tell you, Alabama is a fantastic state. I look forward to going back. But as I'm sitting here today, markets just closed. And another horrific day on Wall Street. Dow Jones down 326 points. NASDAQ down 373 points. S&P down 65. Russell down 43. And as most of you know, the tech giants in the past few days have lost over $1 trillion. I don't know how much more they lost today, but another horrific day in these markets. Before I go on today, I want to respond to a comment from a couple days ago. I believe it was Friday or Saturday. And somebody said that I don't understand crypto. And I want to respond to that. What I do understand is common mathematics. What I do understand is arithmetic. Friday, we saw Bitcoin down 12% in one day. Today, it's down over 5% as I make this video. Ethereum down 10% as I make this video. This would be like gold being at $900 right now. So what I understand is simple mathematics. What I understand is money. And what I understand is safe haven assets. And this to me, when I look at the crypto market, the 14,000 plus cryptos out there, how many today are at zero? How many are gone? But how can anybody sit here and call this stuff a safe haven asset when it's losing 10, 12, 21% in a day? Again, I don't like losing money. I don't like looking at digits on a screen. I like hard, tangible, physical assets that I can get to, because if you don't hold it, you don't own it. But these people who will say, you don't understand. No, I understand what losing money is. I understand mathematics. I understand safe haven assets. And this stuff, to me, is a Ponzi scheme. I understand what a Ponzi scheme is. You need me, and you need all the viewers watching this to keep buying this stuff so it goes up so that you can keep gambling and making money. That's what I understand. This stuff to me is fool's gold, and I'll leave it at that today. But let's get on with this video. Coinbase earnings were bad. The crypto exchange is now warning that bankruptcy could wipe out user funds. Coinbase today down 27%. I remember when it was trading around $357, maybe a little higher when it opened. It might have been around 400. Today, it's trading around $52 a share. CNN, skipping meals, racking up debt, how inflation is squeezing single parents. Completely unacceptable what is happening. And it says here in this article, daily life now the most expensive it's been in 40 years. I would say that's based on the 8.3% inflation number that we got today. But you and I both know that inflation, real inflation, is hovering near 20%. So it's probably the most expensive of all time. Single parents say that they are running out of places to cut costs. We've talked about this a year ago. You can only cut out so much. You can only squeeze so much blood out of a turnip before there's nothing left. Wages have not kept up with the price of groceries, gas, rent, and utilities. More than half, get this, listen to this, ladies and gentlemen, and this is on CNN. More than half of single parents make less than $15 per hour. Single parents are skipping meals so that their kids can eat. This is unacceptable. I mean, think about this as a nation. Over half of the single parents of this nation making less than $15 an hour. And this is why people are drowning in debt. This is why people are falling behind on their rent, their auto payments. This is why people have absolutely zero savings, zero retirement put away. And this is why we're heading off of a cliff here. This is really, I mean, you talk about a temperature check. You talk about a barometer. More than half of single parents in this country make less than $15 an hour. How in the world is this economy even staying afloat? We hear about auto sales and we hear about the record number of home sales and home prices. How in the world can this be when people are being absolutely obliterated? Inflation remained near a 40-year high in April. Here's where consumers plan to cut spending. This on CNBC today. 52% they're cutting back on dining out. So what does this mean for the restaurant industry if people are going to be cutting out going out to dinner? What does this mean for the bar industry? Bad news. 42% said they're going to be cutting back on driving. Again, this is bad for tourism, the vacation industry. If people aren't coming to hotels and resorts to spend money because they're cutting back because gas is too expensive, bad news. 40% says they're canceling a vacation. 36% say they're going to cut out monthly subscriptions. 32% said they're switching to a generic product. 26% said they're delaying buying a car. We're going to see more cars. We're already seeing more cars hitting the used car market. Once chips become available, who will be buying up all these new cars? 20% say they're going to be delaying the purchase of a home, and that's telling us where this real estate market is going. 16% say that they're borrowing money or taking on credit card debt to cover expenses right now. And 12% just say, hey, they're just not paying their bills. They're just not paying their bills. This is just an unbelievable economy that we're witnessing. I've never seen anything like it. I don't think you've ever seen anything like it. Your parents, your grandparents, your great-grandparents, nobody has ever seen anything like what we're experiencing and witnessing today in regards to this economy. It's getting really windy outside, so I decided to film the rest of this video in the office, so I didn't have to put you through that. But let's continue with some of the news today. And there's an article today on Bloomberg. It's titled, "Prices are going up so fast at this restaurant, they're using stickers on the menu." This is a Mexican restaurant in Miami. And I thought this was really interesting because where did we hear about this years ago? This is what they've been doing in Venezuela because of inflation changing so abruptly, so quickly, that they don't even put, in Venezuela, they don't even put the price of the food in the menu because it's changing so quickly. So they just put stickers. And this is now what we're beginning to see here in America. And it's happening right now at a Miami restaurant where they're putting stickers on the menu because they cannot keep up with how fast the cost of food continues to rise. And as we continue to watch this inflation destroy this economy, destroy households, there's no doubt that the market is playing chess while Jerome Powell and the Fed is playing checkers. Right now, inflation, official inflation, 8.3%. But you know and I know that's near 20%, might even be over 20%, depending where you live and what type of industry you might be in. You're seeing inflation way beyond 20%. But while we have official inflation in the 8s, we have interest rates under 1 percentage point. The Fed's not doing their job, in my opinion, and this is going to allow inflation to continue to get worse. We have 6 weeks before the next Fed meeting where we're probably going to see a 50 basis point rate hike. In the meantime, inflation is going to continue to run very, very hot. And in the meantime, people are going to pay a price here. They're going to pay the price at the grocery store, at the pump, to heat, to cool their homes, etc. We are going to pay a price here. And it's just shocking that the Fed isn't stepping up and being more aggressive, that they're not doing something today, that they're going to allow this to continue for the next 6 weeks before we get the next interest rate hike. And in the meantime, what's going to happen to these markets as they begin to price in another rate hike? And you can see right now what the last one has done to these markets. It's not digesting it too well. And this is because these markets and this economy are so weak. We've been told for years how strong the consumer is, the stock market, the economy, but that's easy to say when you have 0% interest rates. Well, once we raised them 25 basis points, we began to see the cracks. We began to see that these markets and this economy and the consumer is not as strong as we were told. Now, with the last one at 50 basis points and now being at 3/4 of a full percentage point, we're beginning to find out that this economy is very, very weak. And it's going to be interesting to see how it prices in the next rate hike. CNBC, 2/3 of Americans live paycheck to paycheck as inflation continues to climb. I asked the question, who's buying stocks, cryptos, and houses when nearly 70% of this country is living paycheck to paycheck? And what does this mean now for the housing market, the economy, and the stock market as more and more people in this country are living paycheck to paycheck? The hedge today, U.S. consumer debt accelerates towards $16 trillion. That's a record. The rate of increase in consumer debt for the fourth quarter of 2021 was also the highest seen since 2007. Housing debt skyrocketing, non-housing debt skyrocketing. You look at student loans and auto debt, it's just absolutely out of control. Economists say don't worry about the massive housing debt, as American homeowners are on average less likely to default because they have better credit than the home buyer in the last crisis back in 2008. That may be true, but what about inflation? What about over 50% of these mortgages are government-backed, Fannie, Freddie, and they require only 3%. A lot of people don't have skin in the game. What about people's savings? It's been obliterated. What about the credit card debt? What about the student loan debt? What about the threat now of these markets crashing and people heavily invested in these markets, people's 401ks being wiped out? And then there's the question about layoffs. When these markets begin to implode, you're going to see layoffs. This means people are not going to have a cash flow. So how do they tread water with student loan debt, auto debt, and the mortgage? We're going to see more homes going up for sale. And again, a lot of people don't have a lot of skin in the game with only 3% down. And if you don't have a cash flow, these people are not going to be able to keep these homes. And so people may have made better loans this time around, but again, people don't have a lot of skin in the game with 3% down. And we have a lot more inflation now than we did back then. We have bigger bubbles than we have had back then. Household debt is much higher than it was back then. Just the price of everything and the everything bubble is much bigger than the past crisis. So this could really, really be bad. And I believe we're going to see the biggest housing crash in world history. Student loan debt hits another record high despite payment forbearance. We have $1.59 trillion in student loan debt. Many Americans say that the debt has become a barrier to achieving financial prosperity and life goals. If you took out a loan to go get a college degree, then this is not my problem. Your prosperity and your life goals are not my problem. There are over 11 million jobs out there. Many of them minimum wage, low wage jobs, but sitting at home crying about your prosperity and achieving your goals is not my problem. This money needs to be paid back, but it doesn't need to be paid back by the taxpayer. If you committed to this, if you agree to this, you should pay it back, not us. CNBC, adjustable rate mortgage demand surges to 14-year high. People never learn their lesson. People are still trying to buy homes that they can't afford. They're trying to buy bigger homes that they can't afford at the worst possible time. And here we are back to adjustable rate mortgages. The share of adjustable rate mortgages increased to 11% of overall loans and to 19% by dollar volume. Staggering. We just do not learn our lesson. To me, this is the worst possible time to buy a home in history, and it would be the worst possible time to take on an adjustable rate mortgage, which I think there's never a good time to do that. But this is pure suicide. But to buy an adjustable rate mortgage in this market at this time, knowing that rates are going up, suicide. Another article in the Hedge, there goes the housing market. And I thought this was a incredible article, an eye-opener. Today, as I make this video, the 30-year fixed rate mortgage is 5.53%. The surge in rates means that housing affordability has crashed to the lowest on record. And I'm going to paraphrase a little bit through this article. It's really interesting, and it's a real good temperature check on what's happening and what's going to happen. John Burns Real Estate provides a monthly snapshot of more than 300 builders across the nation. And here are some of the comments that they put together from builders across the U.S. On Twitter. These are Twitter comments from builders. And I'm just going to go through some of this right here and ask yourself, is this a good time to buy a house? If you're in escrow right now, and I'm not telling anybody what to do, and I'm not giving financial advice, but if you're in escrow right now, are you going to close your escrow? Do you really think that this is the time to buy a house? If I was in escrow on a property right now, I would be canceling that escrow. Here's a couple of the comments, and there's a bunch of them, but I'll just go over a handful. Demand is slowing, namely entry level, due to payment shock. Investors are pulling back. Another comment from a builder. Ripple effect of rising rates starting to hit as they move up market. Dallas home builder said this: interest is shrinking, or buyers are truly pausing. A Houston builder says this: many first-time buyers simply no longer qualify with the increase in interest rates. A San Antonio builder says on Twitter, traffic has been cut in half since the hike in rates. Raleigh, North Carolina builder, investor activity has slowed dramatically. Washington D.C. builder, traffic cut in half in March. Worried about first-time buyers, many fewer real buyers. Seattle home builder says this on Twitter: pause by a large population of buyers, rates starting to knock people out of qualification. Riverside San Bernardino builder, right here in my county of Riverside, cancellations are beginning to creep up due to loan declines and job losses. Very interesting, coming from Riverside San Bernardino. Los Angeles home builder says this: buyers more cautious. A San Diego home buyer says this: buyers more edgy. Boise, Idaho builder: we expect to see a slowing of sales in the coming months. Tampa, Florida builder: people are not willing to pay the prices anymore. Reno builder: cancellation rate last month more than doubled from 6% to 16%. Also seeing more buyers put buying decision on hold. So I thought that some of these comments were very, very eye-opening, a real temperature check to what is happening in the housing market right now. And to me, it's a canary in the coal mine to what is coming. Is this a good time to buy a home? Comment down below. Are you in escrow? Would you be in escrow right now? How many people right now have pulled out of an escrow, canceled an escrow? Comment down below. Let me know your thoughts. To me, worst possible time in history to buy a house. And I want to close with this last article. Medical debt has dropped during crisis. New recession shows. That trend soon could shift. No, that trend is going to shift, and I can't even believe that it hasn't already, but nearly, as I researched this morning, nearly 40 million Americans have diabetes in this country, and many people don't even know. 1 in 5, they say, have diabetes, don't know, because they haven't been checked for it. But a lot of people walking around that have it don't even know, but 40 million Americans do know that they have diabetes. Now, in the past week, I've been to Texas, Florida, Las Vegas, Nevada, Alabama, and I'm back here in California. And one thing I have observed in all these states, and feel free to comment down below, one thing I have observed, and this is not being judgmental, this is not criticizing anybody, this is not making fun of anybody. I clearly, I could be in better shape myself, and I'm really gonna make an effort to get in much better shape this spring and summer. But one thing is very clear from my observation is this: people are in terrible shape. They are in terrible health. Obesity is running rampant in America, and our health system is going to be inundated with crisis from heart attack, stroke, diabetes, cancers, all this. And as the economy worsens, people are going to eat cheaper food. They're going to, feed their families with cheaper food because their budget doesn't allow them, to buy the best food. And when I'm at the grocery store, what I see really out of stock consistently is these frozen meals, loaded with chemicals, loaded with sodium. And this is really tragic because we're going to pay a huge price here down the road because of this. But I've never seen so many unhealthy people, diabetes running wild, obesity running wild. And it's going to get worse because people are going to be forced now to make a choice, and they are not going to be able to choose the better food, the better quality meats. They're going to buy the frozen foods loaded with chemicals and filler and sodium. And this is, I see so many kids so young already obese. And as they get older, this is going to really cause enormous health problems. And so just really over the past week, witnessing what I witnessed. And look, I am not here to judge anybody. I could be in much better shape and health myself. And so watching this and observing this, I'm really going to work more on my health and my body going into this summer. It's so important, ladies and gentlemen. You do not want to be a statistic of diabetes and obesity. There's so many things that can go wrong because of this, the cancers and the strokes and all the illnesses. So, just take this advice, get in better physical shape today, start today, cut things out, cut out the garbage, cut down the calories, exercise more, just get out, take a walk, just do something, join a gym, just anything. Again, just being in multiple states in the past week, they're all the same. I mean, every state, the condition of people looks the same. And so it's a wake-up call to me, and it should be a wake-up call to you to get in better shape. You only have one body. Treat it as your temple and get in better shape. So I'm going to leave it there today. So much happening. These markets are in big trouble, ladies and gentlemen, and it's really getting concerning. It's scary to see how many trillions of dollars have been wiped out of these markets and how many more trillions will be wiped out. People's 401ks, the retirements being absolutely hammered, and what's in store for the pensions. We're in uncharted water. Never been here before, and who knows what tomorrow brings. I would believe that they're going to do something to try and ramp up these markets here tomorrow or very soon. But what we're seeing in the cryptos, stocks, it's getting really concerning. What's going to happen when they raise rates again? Now markets are going to have to begin pricing this in, and what kind of effect will we see? Comment down below. This is really something to witness. How much lower will it go? How much lower can it go? And is America heading into a depression? I believe we are. I believe it's already started. Prepare the best that you can, ladies and gentlemen. God bless.